Can you keep up with the pace of market regulatory reform? MarketsReformWiki.com, the place to keep up.
What usually causes emerging managers to fail?
Really, you can put these reasons typically into three categories. So they might be capital reasons. So that could be the way that people approach trying to raise capital, could be the capitalization of the management company. Then there are business reasons. Most of the people who are running strategies are not businessmen, they're traders, or they're people who've developed algorithms. They're not people who run businesses. Then the third aspect is strategy. Fortunately, strategy reasons tend to be fewer and far between, as you would hope with guys that this is how they make their living, but people still do make mistakes in terms of timing, in terms of not listening to what investors want at a particular time.
What makes setting up the operation structure so difficult?
If you were a great chef, so you were someone who'd worked under Ferran Adria or Heston Blumenthal or Daniel Keller or whatever, you wouldn't, if you were going to go finally strike out on your own to set up a great restaurant, you wouldn't do it in some four-seat flea pit in the back of Beyond somewhere and expect people to come and pay $100 for a main course in your restaurant. It's just not something that you do. You'd understand that if you want the sort of clients that have come to the restaurants that you worked in previously, you'd need to do it in a sensible place with the right staff, in the right location. And yet hedge fund managers kind of expect that just because they may be traded at a big name beforehand, that it'll be fine for them to just go, set up, the money will come in because they've made money before. And it just doesn't work like that. Make sure that you don't have the guy who's the portfolio manager doing sales. You don't have the guy who's the sales guy trying to cover the operations. All of these aspects are very specific skills. And sure, it's very difficult when you're an emerging manager to try to staff all of these internally because it's too expensive. But at least make sure that either through leveraging technology or leveraging outsourced relationships, you find a way to make sure that you're covering each of these bases individually with clear reporting streams and clear systems that cover off all of the different aspects of the business.
How should emerging managers work on marketing and sales?
I think that there are a few things that people can do to help themselves. One is make sure that your timing is right. So investors do chase returns. If you've had bad returns for 3-6 months, you're just wasting your time. If you're going to go out and talk to investors, you're much better spending your time on working out why you were losing money, trying to improve your strategy, and then go talk to people when you're actually making money. Second thing is understand what stage you're at. If you're a $10 million fund, or have less than that, then to be honest, you're much better leveraging your personal relationships. You're much better going to try to find family and friends. Go spend some time on taking your rich uncle out for dinner and getting him drunk. Don't bother going and sitting and talking to an institutional investor or flying across the Atlantic to talk to an insurance company, because it's not a sensible use of your time. If you're in that sort of next bracket of 10 to 30, 10 to 40 million, maybe even 10 to 50 million, then your best plan is to think about seed, acceleration, early stage investors, but guys who are focused on this. They understand this part of the business. They understand the risks that they're taking, and they want to be compensated for that. And typically that's by reduced fees or revenue shares or equity in the management company. It's futile to expect that you're going to keep 100% of your business all the way through. You have to have some sponsorship. The best route for people is to find the right partner that can help them grow from that $20 to $50 million range through the $100 million range, when they can finally start having conversations with more mainstream institutions, family offices, pension funds, hedge funds, insurance companies, endowments, all of the other allocators that are out there.
What trends have you seen in managed futures?
Historically, people used to treat managed futures and hedge funds as separate asset classes, and so if you were talking to the hedge fund guy at a particular allocator, he might say, sorry, I don't do managed futures, that's somewhere else. And so you sort of lost out on that traditional alternatives hedge funds bucket, which has been growing significantly over the last 5 years. Managed futures sat a little bit to the side of that. And I think that now increasingly people view managed futures just as a part of their hedge fund allocation. And so I think that the industry should benefit from that as more and more people see it as a more mainstream asset class.
Is the economic uncertainty good or bad for managed futures?
To one extent, it could be perceived to be helpful, because, as I said, people are looking for something that's going to protect them if things do go worse. On the other hand, all of the political intervention that you see at the moment is meaning that trends are very difficult. Certainly longer-term trends are very difficult to spot and to follow. And I think that a lot of people are sitting there scratching their heads because, the computer systems, the algorithms that people have set up in order to run these strategies cannot contemplate the whim of Angela Merkel and François Hollande.
What is the potential for managed futures?
I think the one thing it's going to be very interesting is to see how the super managers fare in terms of, if you look at the largest managed futures managers, the AHLs and the Wintons and the Blue Trends of the world, performance has not been great over the last year-ish. Winton was an exception last year, but they're down this year. It will be interesting to see whether people continue to allocate to those strategies and whether those guys are able to continue to make money. No matter how much capital comes to them, whether they're continually able to innovate and whether all of the PhDs and scientists that they bring in are enough in order to keep their business as the market leader in the space. And so I think that the flow through from that means that there is opportunity for guys who are in the chasing pack, who, if performance starts to fall, you might find the next Wintons and Blue Trends and AHLs.